de laatste presentator reeds aanwezig is. Zijn naam is Andrei Anissimov. Het is ook een presentatie die in het Engels zal gehouden worden. Hij heeft het ook over opties en uiteraard, ja, hij vindt dit soort instrumenten het perfecte instrument om te beleggen. Hij is dus een Duitse investeerder, maar ook auteur. Hij is oprichter van Trader IQ GmbH. Dat is dus een soort van investeringsacademie die zich richt op de optiestrategieën. Hij handelt ook op zero DTE opties en op de Europese opties. Hi Andrei, are you already available in the presentation?
Yes, I'm here.
Okay.
I'm just turning my webcam on so you can see me. And then we are ready to go. This should work.
We see you, we hear you, and I will give you the right to present your screen.
Yes.
So I hope you you got something from my Dutch introduction.
I don't speak Dutch. This is my badge. So the presentation will be in English. I am Germany based. I live in Berlin. And normally I speak in German. So it's a first time for me to speak in English. It's nice to be back because everything I learned about options basically was English speaking. And it's a pleasure to be here. Thank you very much for inviting me.
Yeah. Happy to be here indeed. And I will give you the screen and the talk.
Mm-hmm. All right. Well, welcome everybody. Thank you very much for taking your time to be part of this event. And apparently I'm the last speaker and I'm English, so please bear with me. I hope you can follow my presentation because nevertheless, it's not my mother tongue and it's the first time for me giving this presentation in English. I'm sure that one or another topic from my presentation can be the game changer for somebody here in the room. At least it was for me, because for me it is a life before option trading and after understanding what advantages options give me as an investor. I've been trading bonds and options and stock for over 15 years by now, and since 2013 I'm educating my students on how to lower the risks and increase the results, returns with the instrument of options. So if you're interested in how to use options for getting the most out of the market, this is a presentation, a very warm welcome. And maybe one or another here in the room has the same issue or the same difficulty. I mean, most of the private investors on stock markets, they dedicate all their time to one question. And the question is, how will the price develop in the future? So all we do basically, and we invest money in our predictions, we try to predict the future. And, you know, sometimes it's going good, but sometimes it's going not good. And before I traded options, every single time my prediction was wrong, I lost money. I got stopped out and I lost money. And I don't know if you like losing money. I don't. So a long time ago, I asked myself a question, is there maybe another way? Another way not to trade the price action, but trading time decay, for example. And this is an opportunity I want to share with you because, you know, losing money is nothing making me happy, probably not you. And my message that I want to get along with this presentation is stop it. There is another much easier way to invest successfully in the stock markets without having a crystal ball, which nobody of us has. I mean, nobody knows exactly what the price is going to do tomorrow. So I'm trying to make money with other more predictable constants like time decay, because, you know, the time ticking of the clock is the most reliable constant in the universe. And if you learn how to make money by, you know, just time decay, you will have a stable results, stable returns, which will not be dependent on your ability to time the entry, to predict the future, and all the stuff most of the traders do. So I want to share with you what options can do for you. This is 5 topics I brought to you, and I will have quite a lot of content. I have examples for you and a lot of examples from my trading, from trading of my students. I want to show you what options are and how options work. Maybe this might be something you are already familiar with or not. We'll see. And then I will show you the basic 4 roles in option trading, how you can increase your profits and reduce your risks with long calls. With long puts, buying puts allows you to make money on falling markets, on falling prices. And then we will watch the option seller side. And the option seller side is one of the most fascinating technologies for me, or one of the most fascinating concepts, because, you know, everybody can become the casino, or everybody can become the bank, which never loses. So we will have a look at the short calls, how to rent out your shares for monthly income, and then also for short puts, how you can buy any share out of there with quite a discount. Very short, brief introduction of myself. I was born in 1997. I'm a Master of Business Administration, and yeah, I'm founder of the Trader IQ Academy. Well, basically, we are the driving school for options. So if anybody wants to learn options, wants to learn how to use this instrument, how to drive this vehicle, so to speak, then the Trader IQ is, well, the place to be. Since 2013, we are educating our students, and I wrote the book, The Great Handbook of Option Strategies, 2015. It's in German. Apologize for that. I didn't translate this in other languages, but this is something that is to come. So yeah, I have educated over 10,000 investors in my trainings, in live events, and also in boot camps, where we meet in a room and strategize on the actual markets, etc. And you know, my learning from over 10 years of educating investors, that everybody, virtually everybody, can use options to increase, to boost their results and also to lower risks. It's something that can be learned and something that should be learned. And once you learned it, then you have a tool in your hand for the rest of your life that will give you incredible results. And incredible results, I mean by this, look at this. These are some WhatsApp messages my students are sending me. Again, it's in German, but I hope the numbers at least make sense. So they write me, okay, I made a win of 76,000 US dollars on 100,000 K start capital, or I have a 18% hit rate. Well, all this is possible when you use and apply the strategies of option sellers. So I hope I caught your attention with this little introduction, and then let's get on. Let's watch what options are, because you know, a lot of people say to me when I meet them in fairs or events that options are something really weird or something for only professionals. But basically, you know, every day we have to deal with options. Also, we name it differently. They might be named differently, but the idea behind an option contract is always the same. So this example is regarding to a concert ticket. And if you have bought a concert ticket to get access to an event in your lifetime, then you have already had an option in your hand. Because if you buy an option, let's think about it. If you buy a concert ticket, you pay the money now, right, to gain a right. To gain a right to, well, visit the event in this example, and you own a right. So this is something option buyers do. They pay money, they pay the option premium for a limited right. And the right is to buy stock if you buy a call, or to sell stock if you buy a put. We will look at calls and puts just in a minute. But basically, the idea behind is, well, everybody pays now to gain a right in the future. And on the other side, there is somebody who is selling these tickets, right? He has a very different business, a very different perspective, because he's collecting the money for issuing obligations. So he gives you a right to enter the event. Well, he takes the obligation to let you in. right? And for this, we get the option premium. This is what option sellers do. We own stock, for example, and we sell rights to use our stock, which gives you an option premium, which is fixed, which is guarantees, which is paid to you now. Yeah? And then you have the obligation to, well, to give the right that you sold. Another different example is the supplier offer. If you, any time in your life, had an issue that you want to buy goods in industrial environment, then basically what you do, you call a supplier and say, hey, dear supplier, give me an offer. Yeah, give me an offer. What price will I have to pay if I buy these goods from you? And the supplier says, no problem, I'll send you an offer. And if you had held this offer in your hand, it is basically an option because it guarantees you the right to buy this good from the supplier to a fixed price during the term of this option. And basically by supplier offers, it's 14 days, which is the term of the option. And during this time, the supplier guarantees you the price, the fixed price that is fixed in the offer, and also the availability of the goods. So this is what option sellers do. They have their own stock and they write supplier offers to the market where they say, hey, dear market, I have something to sell to this price. Is anybody willing to buy it from me? And for this guarantee price for the term of the option, we get the option premium. So, you know, you can take both sides. You can be the option buyer and the pay premium to get a right, or you can be an option seller and then you collect the premium for issuing some obligations. So let me give a short overview what an option is. An option is nothing else than an agreement between two parties. Two parties, or the buyer of the option, and on the other side, the seller. Always where is a buyer, there must be a seller. So you can take both roles. You can decide whether you want to be a buyer of an option or seller, or you can also combine these two basic roles. Then you have advanced option strategies, which are a lot of fun. So yeah, an option is regulating a certain amount of goods. It's called basic underlying assets, and basically it's shares of stock, or it's called also ETFs, and basically it's 1 to 100. So one option contract always controls 100 shares, which is a multiplier of this option. Every option has a term. So there is a limited period of time where this obligation that the option seller gave is valid. And after expiration, the option, well, stops living. So it, you know, it just expires when the term is at the end. And statistics shows that over 70% of all options traded in the markets are expiring worthless, which is a very good news for option sellers because, you know, we sell the rights and we collect the premium, and no matter whether buyer takes the right or not, we have this guaranteed fixed income, which helps me to pay my bills. Well, if I want to pay my bills regularly, I have to know which money is coming in from option trading, which is the great advantage of an option seller. So yeah, there is an asymmetric distribution of duties, like mentioned. The option owner pays money to buy a right, and the option seller, well, he is getting an obligation. He's selling the option and taking the obligation for a limited period of time and is getting paid for this. So let me bring an example why options are great, why they're traded, and what advantage can you take for yourself if you understand the concept of basically stock options. Well, let's look at the underlying asset. It's a share, and today's market price is 100 euros. Well, I believe that the stock will go up. So I look in my crystal ball and I have this market impression. I believe in growing markets or bullish markets. Well, what I can do, I can buy the stock right away, right? This is what everybody does. They invest 100 euros in their future expectation for the stock to rise up. Well, it might go good or it might go wrong. And the problem is, if it's good, okay, everything is great. But if the stock, instead of rising, drops, let's say from 100 to 50 euro, then you lost half of your money. You lost 50 euros and you are stuck with this share, which is now less worth than your investment. and then you have lost money. Well, you can do it another way, a completely different way. Well, you know, a lot of times I have a market impression that it will go up, but I don't want to invest 100 euros in my crystal ball. No, I don't want to buy the stock immediately. Instead, I'm buying a right? I'm buying a right to buy this stock for 100 euros. Well, if I have the right to buy it at 100 euros, which is much, much cheaper than investing in the share, then I have invested less money. Yeah, I have to pay the premium for the price guarantee and duration for the term of this option. And you know, if my market expectation goes up, so the markets rise and the stock costs 200 euros, well, I will make the same profit as owning the share, right? I have the right to buy it at 100 euros. I can buy it, sell it to the market price. I will make the same profit as holding the shares. But on the other side, if my market expectation is wrong, if I missed and the market drops, I'm not caught with this stock, which is now only half of my entry price, but I just let the option expire. You know, it's like I make a bet. If it goes up, I make the same amount of owning the shares, but on the downside, I have much less risk because I'm not investing in this underlying, and I don't have to, you know, do a long-term investment if the stock has dropped. So what we are talking about is underlying, and I just mentioned you the stock is underlying. Well, an option always refers to some underlying asset. It can be commodities like precious metals, petroleum, industrial metals, agriculture products, stocks and indices, and ETFs as well. It's always a very common investment to trade ETF options. Well, in the basic, most of the time, it's stock or indices options traded by private investors. But yeah, you can also trade options on forex markets like currencies, futures. Let's put it this way: everything basically that is moving on the stocks can be traded with options, which increases your, well, gives you the same chances by lowering your risks. And this is an option chain. This is what an option chain looks like. I hope you can kind of familiar with that. If not, I can show you very briefly what it's all about. Well, here's the underlying, right? We see here Apple is an underlying asset of this option. We see also the market price of Apple. It's roughly around 200. And then we have different terms of these options. You know, we have very, very, very short-term options, which is an awesome investment. Like zero DTE trading is one of the most favorite of mine, and it's making a lot of fun to trade short-term options which expire today or tomorrow, which gives really excellent time decay premiums. But you also can take longer terms. Like here, I have a term of 6 weeks. 43 days till expiration, and there you see the calls on the left side, the puts on the right side. So basically you can decide yourself, well, I have a bullish impression of the markets, I believe that the markets will go up. Well, I will not buy the Apple share for 200 euros. No, I just will buy an option for a few bucks, let's so speak, for 100, 200, $300, which saves me a lot of money, gives me a lot of leverage on the markets, and allows me to go wrong, right? If I'm wrong, then I'll just let the option expire, which is good enough. So option exchanges, the biggest in the world is the US market, no doubt about that. Chicago Board of Option Exchange is the place to be. It's the biggest option exchange in the world. And of course, in Europe, we have the Eurex, and we have also CBOA entering the European market, which is very great news for us, because we can very soon trade European underlyings over Chicago Board of Option Exchange, which will make more assets available for trading, increase the liquidity, and give us as retail investors a lot of opportunities. Yeah, we need a broker to access the option markets. WH Selfinvest is the place to be. The multi-market account just presented by the speaker before me is definitely the easiest way to access option markets, and then to trade over 130 different countries. So basically with only one access, with that one account, you have access to all markets all over the world. You can use the strategies for US market, for European stocks, also for Asian if you like. And my investment focus is in USA because the liquidity is higher and because the trading hours are so convenient for me as a busy man. Yeah, 15:30 till 22 o'clock is the best time for every private investor. We can do our trading in the evening hours when we have free time. So there is a lot of tools available for the US markets, and I hope that the European market will be also this liquid very, very soon, and then we have a lot of instruments also available for us. So yeah, an option is nothing else but temporary price and availability guarantee, and it is issued against payment. These guarantees are traded on futures exchanges, on CBOA or Eurex. We have the strike, which is the guaranteed price, where the underlying good will be traded at this price. We have a term of an option, right? Every single option does expire sooner or later, and you can decide what term you buy or sell, long-term options or very, very short-term options. And we have the multiplier. I mentioned it before, one option contracts, well, it controls 100 shares and gives you the control of a lot, which is to say, of 100 underlying assets. Yeah, options can be bought or sold by every private investor. I will show you both sides. And let's look at the calls and puts very briefly, because these are the two instruments you have. That's all you have to need. You need to know. We need to know what a call is. A call is a buying option guaranteeing the owner the right to buy 100 shares of the stock at fixed price. And then we have the put option, and the put option guarantees the owner the right to sell 100 shares of the stock at the set fixed price. So this is what the option looks like. If you trade it on a trader workstation or anywhere else, you will see this. You will see the underlying, which is eBay in this case. You have the expiration or the term of an option. You then have the strike, and then you have the type, the call. So if I own this option, which is awesome, I can buy eBay stock at $60 during the term of this option. And if the price goes up to 100 and I own the call, this is really good news because I can buy it for 60, sell it for 100 and make a great profit, the same profit if owning the stock. But once it is expiring, if the price goes down, then I lose much, much less than owning the shares. So yeah, it's a bullish strategy. You would buy a call every time when you expect the prices to rise. And yeah, the call option will lose value over time. The so-called time decay is against the option buyer and its advantage for option seller. So timing is important when you trade options, and if you have any basic abilities in trading analysis or technical analysis, then you will love this because this is a student trade that was performed by one of my students. You see the gold here is underlying gold ETF, and the students watched this chart and they became the impression that the markets will go up. So you see this and you think, okay, the market might go up, right? Yeah, you can buy the ETF, 100 ETFs of GLD, of gold. That will be a huge investment. And on the other side, you can just buy the right to buy this ETF. And when then the stocks go up, you will be more than happy, which my students reported me here. So what you see is a basic example of using call options to capture bullish movements on the markets. We had here this setback to the support after the liberation day of Donald Trump. The assumption was here, well, we will see bullish price action. And my students, well, they bought 3 calls for $3.95. So it's not a big investment. Total investment was roughly $1,200 US. And they bought it for $3. Then the price of the underlying went up. And within 2 weeks, the price of the call increased from $3 to $30, which is great news for the option owner. The earnings per contract were over 2.5K, and with 3 contracts, my students made here, well, roughly $8,000 US on a very, very limited period of time. Indeed, it was only 2 weeks, which they gained 600 profit on their investment. So just remember that when you see markets rising, or you believe that the markets will rise, you can use a call instead of buying the underlying stock, which will save you a lot of money and a lot of risk. Well, on the other side, we have put options, and put option is a guarantee to have the right to sell 100 shares at the strike price. So if you will look at this option contract, well, the owner of this put has the right to sell eBay stock for $50. And you might see what the advantage is, because, you know, if I own eBay stock, well, I have the risk that the market will drop. And this risk is the biggest risk every investor has, right? This is something we are living with this fear of dropping prices. Well, not any longer. If you have a put in your portfolio, you can hedge your whole portfolio, or you can buy the right to sell the eBay stock for $50. And even then, even if it drops below 50 at 30, 20, 10, I don't care, as long as it's, as much as it drops, it doesn't make me any additional risk. Why? Because I have the guaranteed right to sell my stock to this price. So yeah, the put is a bearish instrument. It will increase in price when the stock falls. So a long put is the right to sell the underlying asset at the strike price. And if you have a strike price with $50, well, then you can sleep at night, because this right takes the risk out of your portfolio, out of your stock owning. This is the reason why puts are bought, basically, to hedge existing equity options. And you know, you've seen this during the Liberation Day, that the prices can drop significantly. And if they do, but you're not affected to this, then you can laugh, well, while others are, well, losing money, basically. And here's an example. This is my own portfolio. This is how I trade put options. Every single time when the market is set up to drop, I have this, you know, this feeling, or this idea, okay, they might drop. I want to capitalize this movement. Well, what will I do? I will buy puts. So this is exactly what I did just recently. I've seen this failing top. This is a technical chart signal, which I capitalized, or I thought, well, let's make a bet, right? Let's make a bet, let's go for it, and let's just try it out. I invested very low money for huge opportunity, and with a very, very limited risk. So yeah, buying puts to profit from possible falling prices is really one of the easiest strategies at all. And if the prices fall, well, high profits are guaranteed. And if I'm wrong, once again, then I will just let my option expire. So I have limited risk, and the risk is limited to the premium I paid to these options. So basically, I increased my chances and I reduced my risks. You know, this is what happened. This is what the S&P 500 did when Donald Trump declared war on the international trade. You know, a lot of investors got a lot of losses during this period. Not my portfolio. I gained 300% on my investment, which basically was over 20,000 euros on profit, which is just one of the examples how puts can be used to make huge profits in your portfolio while the markets are dropping. So yeah, advantages of option buying. Well, see, with this less capital required, you indeed have a leverage. You can invest in much more different opportunities. You don't have to take that much money in your hand. And if you invest less capital, well, that means that you have less risks. So you have no issues risks, like if you buy another instrument from a bank, you know, the bank can go bankrupt. Not in option trading, there is no issuer risks. There are also no hidden costs whatsoever. The option chains are standardized. They are trading over the stock exchange, and everybody can be the bank. Everybody can be the casino. So you can decide you want to be the player or you want to be the casino, and you can take both roles in option trading. And if this interests you, then I'm very glad to present you really what changed my personal life. And this is the strategies of option sellers. You see here Las Vegas, and you might know that the casino has an unfair advantage. If casino roulette, there is black and there is red. And when black falls or red falls, then the gamblers take everything. But there is a green zero. There is only a chance less than 3% that the green zero will fall. But if the dice, the zero is hit, then the casino keeps everything. Well, basically, this is what we do when we sell options. We increase our opportunities. And yeah, we can get 80–90% hit rate, which is very, very great, because you basically, every single trade you make becomes a winner. Yeah, and if you went wrong, then there are great options of risk management, opportunities through risk management, which can even increase your returns. So yeah, most of the traders, most of the stock market investors, they do only one thing. They buy stock to sell it as soon as possible to a higher price, which is called capital appreciation. So this is what the most people are about. They buy stock not to own it, but to sell it as soon as possible, as expensive as possible. And this goes only well when the markets are rising. But on the other hand, you have this business of renting out in property. Like if you see this property, yeah, you can buy it to sell it away, but you can also buy it to keep it for your lifetime. Then you find a tenant which pays you rent every single month. And once you establish this, then your life becomes easy because you don't have to make buying and selling decisions all the time. You don't have to time your entry and exit. No, you just hold the asset and then you rent it out, and then you collect your monthly premium for selling the options, which is basically guaranteed and makes you independent from the price movements because, well, the rent is coming no matter the price has risen or dropped. So yeah, this is basically the difference between the traders that are looking in the crystal ball as illustrated here, or the investors, which are, well, they're playing a complete different game. The trader does bet on the right prediction of the future and wins only if he's right and loses if he's wrong. Well, an investor or an option seller, well, he earns his money no matter how the real estate prices develop. And the principles that we apply as option sellers is just to hold the underlying asset that can be a good dividend stock. Then we collect our option premium by renting it out, by selling calls or selling puts. And then we take this money, reinvest it to acquire more assets. And this is the way the portfolio is growing and growing and growing, which is very, very comfortable place to be. So yeah, you might be a trader or investor. Well, I'm both. I'm gambling a lot when I see good opportunities, but my main income is not dependent on my crystal ball. It's just dependent on me once a month selling an option and collecting an option trading, this option premium, which is much easier. Yeah, it's much easier. It's also very less time intensive to buy the stock only single one time and then get the monthly income as option seller. And I have brought you Andrei Kostolany because I didn't invent the strategies, you know. I learned them from Warren Buffett, from Andrei Kostolany, from the big guys in the industry. And Andrei Kostolany said, well, back and forth only empties the pockets and will only fill the banker's fee bags. So this is a reason why a lot of people have heard that you have to trade a lot. Well, my message is you don't have to trade a lot to make good money in the stock markets. You don't have to trade often. You don't have to be right. You just basically have to acquire one good stock for your lifetime and then just renting it out. So this is basically the system of option sellers. There are only 3 steps. Please write it down. This will be the game changer if you are not applying the strategy until now. Well, maybe you will in the future because option sellers establish a cycle, and this cycle is out of 3 steps. First, we want to buy good stocks at low prices, right? We can buy every single stock with discount. Then the second stock is to hedge the portfolio, to assure against price losses, which is done when you buy puts, like shown before. And then you just keep it and you grow and you collect your cash flow and you collect your option premiums and you return and return and return and return and return. And then you have a high and reliable monthly income out of the stock markets. So the system is basically very, very simple, which is very fascinating for me, because every single professional I speak, well, they say, of course, of course we do it this way. Of course we are acquiring stock with put sales and not right away to the price is called in the markets. And while it is standard for professional investors and funds managers, well, private investors can use the system as well. And nobody basically uses it, which is a pity. Only very, very, very small amount of market participants use the opportunities the options give us on the seller side. So let's look at this. Let's watch how you can buy, acquire stocks at discount, and how you can rent it out after you bought it with a discount. We will start with the puts, and we already discussed that a put option guarantees the owner the right to sell 100 shares at the strike price during the term of an option. Well, the other role, somebody who sold this put, well, he takes the obligation to buy 100 shares at this strike during this term. So if you write a put, if you go short put, then you take the obligation to buy 100 shares at the strike within the term of the option, should the buyer of the put wish to exercise his right. And the income of this trade of option seller, well, it does not result from any price changes, but from the premium collected and from the time decay, which is basically the income of every option seller. The only question, indeed, which we have in option seller is what will happen at the expiration. Will the put be in the money and then I will get the stock? Or will the put be out of the money and then I just collected the premium, I don't have to do my obligation, and then I keep the money and I can return this game all over and over and over again. This is basically my game-changing moment of my life. That's the reason why I brought it to you. Yeah, it's quite an old article, but once you read it, once you understand it, then you understand how Warren Buffett became the most rich investor in the world. Because, you know, most people think that the only reason he's the richest investor of the world is his ability to do good stock picking. Well, this is only the half of the truth. The other half of the truth is he has a team which understands the option seller strategies, and they increase their returns on a daily basis, basically, with these instruments. So here's an article that changed my life and hopefully will give you some idea how Berkshire Hathaway is run. We're having here Coca-Cola stock, right? And it's April 1993, so long time ago, but I have a very fresh example with basically the same system. And Warren Buffett wanted to buy Coca-Cola stock. And it was traded roughly around $39 per share. Well, Warren Buffett valued the company and he determined that it would be interesting to buy some shares, but he only wants to pay $35. Well, this might be a situation familiar to you. You look at the stock and you would be interested in buying the stock for a cheaper price than the market price, right? Well, every single time I see a stock, I would not mind to get it cheaper than today's price. So what can we do? What does Buffett do? Well, he wrote 5 million put options with a strike price of $35, which is basically an obligation to buy this stock to this price. Well, this is his idea anyways. He wants to buy the stock, and every single time you see in stock and you are willing to buy it, just think about it, that you can sell an option and collect an option time premium for your interest in buying the stock. So yeah, if Coke fell below $35, let's go in the article, then the option takers would put these shares to him at the strike, which is perfectly fine because this is what you want to do. We want to buy this stock at $35. And if it falls below the strike price, then we will get, well, what we want. And if the price does not drop, so it goes sideways or it goes up, for example, well, then the option will expire worthless. Nobody will put us a stock to $45 when the price is higher, and then we just collect the premium. We earned the money, and here article says if Coke rose instead, Warren Buffett would be happy enough because he collected $1.50 option premium since he was doing it with 5 million put options. Well, he collected 7.5 million US dollars with one single deal. So once I wrote this article, I wanted to know what's behind the system. You might understand it because, you know, just making 7.5 million for the obligation to buy your desired stock at your desired price, well, this sounded familiar to me. And basically, or this sounded interesting to me. And this is what the whole principle of Warren Buffett and his company is. And basically what every put seller is using. Yeah, we are willing to buy the stock and we want to pay $35 max. Today's market price is higher. It's trading around $39. Well, I will just sell a put. I will sell a put with a strike price of $35 and take the obligation to buy at my desired price. Well, for this obligation, I will collect the option premium, $1.50 per stock. In a contract which controls 100 shares, it will be 150 US dollars. And no matter if you do it with one contract, with two contracts, with 10 or with 5 million, like Warren Buffett, it's the same system and you're playing at the same team as the greatest investor of all time. So basically, yeah, we are being paid to be willing to buy the stock below the current market price. So this is a trade example of my own portfolio. This is Nestle, and this is not 1993, sondern this is 2025. You see the Nestle was trading roughly around 75 Schweizer Franken. And I was interested in buying this stock at this price. You know, good stock, dividends, etc., good fundamentals. So I looked at the option chains. Here's the screenshot for Trader Workstation, and I saw, okay, the stock is trading at 75 Franken. Well, I can decide myself to which price I'm willing to buy this stock. I can buy it for $70 or for 71 or for 72. Basically, with a selection of the strike, I basically decide myself which price I'm willing to pay. So in this particular example, I was willing to pay max 72 Franken. The price of the stock is now 75. I'm willing to pay only 72. And for this obligation to buy Nestle at 72, well, I got my $1.50 or $1.55 at this particular example, which is basically almost the same as Warren Buffett. Like, it's the same industry, it's another company, it's a European company. And yeah, I want to buy the stock for discount and I'm getting paid for my obligation. So yeah, you probably know what Nestle does. It's one of the biggest world and food and beverage manufacturers in the world. It does pay a dividend. It got, you know, it got down. Yeah? And at this price, I was willing to buy 100 shares. But instead of grabbing the shares right away, I do it like I learned it from Warren Buffett. I sell a put option. And I make a purchase commitment for only 4 weeks. So I guarantee to the market, then I will be buying Nestle at 72 for the next month. And I will buy it below the actual price, $2.70 below the market price right now. And here my revenue is, just as an example with Warren Buffett, is 155 Schweizer Franken, Swiss francs, sorry about that, Swiss francs, and which is on 100 shares, 155 Schweizer Franken. And this money belongs to me. I earned it, I took it when selling the contract. So no matter how the stock develops, I already made a gain, right? And even if I have to buy the stock then at 72 and I get paid 150 for this, you know, the money I earned will lower my entry price. So basically, worst case, I will get Nestle roughly around 70 Swiss francs. So this is a setup, you know, it was going down, 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 and then I saw it was going sideways. You see here the strike, and you also see the expiration. It's roughly 1 month. Unfortunately, I must say, unfortunately, the prices went up. I would be really happy to get the option to get Nestle at this price. But basically, if it rises, I'm happy enough. I'm happy enough because I collected my option premium, I kept my money, and I can do this trade over and over and over again. And this is what changes the probabilities to our favor. See, we get the money guaranteed. If we sell a put, well, then we take the obligation to buy the stock at this price. Well, if the stock rises, I just keep the premium. If the stock goes sideways, then I will keep the premium. If the markets drop, I will keep the premium. And the worst case is that the markets drop, and then I will get my desired stock at my desired entry price. And this is what I use every single time to acquiring stock instead of buying it right away for the current market price. So yeah, we have looked at the buyer's side, and the last but not least is the short call, which is the obligation to deliver, which is really basically one of the basic strategies for everybody who has stock. Well, if you have stock in your portfolio which is not going through the roof but going sideways, or you're not performing the way you wanted, well, just think about it. You can rent it out. You can sell a call option, which is the obligation to deliver this stock to your desired price. So yeah, if you write a call option, then you take the obligation to deliver 100 shares at the strike price within the term of the option on demand. Well, income from option writing does come from the option premium, regarding of how the markets perform, regarding of the price of the prices rise or go sideways or drop. I have this fixed income by my obligation, not by the price movement. And here, if the option is out of the money on the expiration day, well, if it's in the money, I have to deliver the stock, so I have to sell it at my desired price. And in all other cases, the option will expire worthless. I will keep my stock, I will keep my option premium, and then I can repeat this all over and over and over again. So basically, this is the supplier, the supplier offer, which we looked at the beginning of the presentation, but now we are the supplier. We own the stock, and this stock is traded at roughly $100 per share. I am the owner. I have them in my portfolio, and I am willing to sell them at a good price, which I self-determine. Well, I will sell a call. I will write a call with a strike, let's put it 110 or 120 or 130. Well, you decide it yourself, and then you sell a purchase right to the market for a limited period of time, like 4 weeks or 6 weeks, something like that. Well, I get the option premium. I collect this option premium for my price guarantees. Basically, I'm guaranteeing the market that they can buy it from me. Well, if the stock rises, well, they will buy. And if not, then I just collect the option premium. So it does belong to me regardless of the price movement of the shares. And well, this is basically the basic strategy. Risk, as it's called, covered calls. And since we own the shares, we guarantee a purchase price for the shares we already own, which does not create any additional risk, right? If you own the stock, you have the price risks. Well, you can buy a put to get rid of them. But if you are owning the stock and you're renting it out with writing covered calls, you don't have any additional risk. The only risk you have is that you do not participate in price gains above the short strike. And the worst case is, well, your shares are being sold at your desired price. This is really the worst what can happen to the covered calls, which is the reason why covered calls are one of the safest strategies of all times. A lot of just regular people, you know, they in US, it's a very common strategy to hold this stock and to write covered calls for 5, 10, 20, 30 years. They do it in their retirement funds. And this doesn't require any skills at all. Basically, if it's a dividend stock, you just hold the stock, you write the calls, and you collect, well, monthly what this stock is paying in dividends yearly. So yeah, don't confuse it with naked short calls. Naked short calls, if you write a call without having the stock in your portfolio, which is much riskier, which is also a way, it's possible, but it requires much more skills. So yeah, these are the results my students do with exactly these strategies. And if you look at this, here is a hit ratio. He states here, I have 80% winning trades, which in average bring me 1,200 euros. Well, the other 20% are losses, and the losses are, well, 300 euros. So this student had made in 2 months 30% on his portfolio, which equals 40,000 US dollars, which is definitely not a bad idea, and which is possible for everybody who understands how options work. And you know, I asked myself, and hopefully you ask yourself now this too, well, if it's that easy, why doesn't everybody do that? And you know, this is a question I ask every single investor when I meet them in trading fairs or anywhere else. I ask them, well, guys, why don't you do it? And the only reason for this is, well, not everybody is familiar with this instrument. And here Benjamin Franklin states, an investment in knowledge brings the highest yields. So if this is of any value for you, if you're interested how you can utilize these instruments and these strategies to boost your results on the stock market, I have a very good news for you, because I will do a live online event, but apologize, it will be held in German. So if you can understand German, then feel free to join me. It's absolutely no cost. It will be 5 evenings after each other, where I will go in detail in everything I showed you, like in a brief overview. And I will show you basically the whole system from the very beginning to the very end, which is bringing stable results to millions of investors while we speak. It will reduce your risks and it will boost your returns. And these are the really simplest and most profitable strategies of the best investors in the world. Well, my students do prove that this system is duplicatable, and I will show you the entire system step by step on 5 evenings. So register now, it's absolutely free, no cost whatsoever. And here is the agenda. This is the timeline. We will have 5 evenings together. It always starts at 6 p.m. And scan the QR code, you know, get yourself registered. You will get the videos, you will get the recordings. It's basically a whole training where we will look on the first evening how the options are working, how they can be used by every investor to reduce risks and increase profits. And then on Monday, on June the 2nd, I will show you how to buy stocks as a discount, like we just saw it by Warren Buffett, with examples, with risk management and Q&A live sessions where you can ask me anything you want. Then on Tuesday, Wednesday, and Thursday, you see here, it always starts at 6 p.m. I will show you how to hedge your portfolio to reduce downside risks, to get, well, basically easy risk-free portfolio. And then we will also have a look at how to rent out your stock. And then on Thursday, June 5th, then I will show you the implementation. It's basically a step-to-step guide to stable profits. So yeah, it is absolutely free. You have no risk whatsoever. Click on the link, you know, scan the QR code, get yourself registered. You can ask me any questions about the system at the event. Yes, it will be in German. I state it right away. But if it's not a problem for you to listen to German and understand, then you are very, very welcome to join the event. All sessions will be recorded, and we will send you the recordings. So if you cannot make it to one or another date, well, get yourself registered anyways. You will get the recordings, and then you can, you know, look at these videos, how the system is working. Well, in one of the last events, one participant received options premium for 2,300 euros in only 2 days. And I will show you how he has done it and how you can gain these results every single time. So I wish we see each other again. I would really appreciate your registration and to see you at the live event and, you know, answer all the questions that you possibly can have on option selling or on option strategies. Well, thank you very much for your time, for your interest. Let me summarize it this way. There are 3 steps to wealth. Well, it's not to buy and sell. It's just to hold long term and then collect to increase your cash flow, collect option premiums, and then most important rule is don't lose money. And this is one of core strategies of risk management, which we will take care at the online event. So yeah, the system of an option sellers is easy and fast way to achieve exactly these goals. And here, 8 of 10 students double their returns within 3 months after understanding the system and applying it in their portfolios. And well, I wish you that you take something out of this presentation, that we see each other at the event, and that you boost your results and lower your risks by starting trading options. And yeah, you can do it with WH Selfinvest, which is a great place to be as a great broker. So thank you very much for your attendance, and yeah, back to you.
Thank you, Andrei. It was a very nice presentation. I see that there are some questions. I think the question here you already answered maybe with the last slide, but what can you give as advice to people starting with options?
Yes. I have a big request, which is not only an advice, but really a best practice. You see, it's not the vehicle which is the risk, it's always the driver, which either does know what he do or not. See, before you drive a car, well, in Germany, you have to make a driver's license, and I think with you guys, it's the same. And if you don't have a driver's license, you get punished by the law, by the police. Yeah, they will give you a fee. Well, in option trading, it's exactly the same. You have your driver's license and you know what you do, and then you can easily achieve your goals. Or you don't know what you do, you don't know how to you know, increase speed or take the speed out of your vehicle, and then the markets will punish you. It's not the law, but the markets will give you a big punishment. So my personal advice is, don't drive a vehicle when you don't have a driver's license. Get yourself educated. It's an awesome opportunity with Chicago Board of Option Exchange entering the European markets. It's one of the great opportunities we all have in Europe to get this instrument to make money for us. And the only requirement is you know what you do and you know how to drive your vehicle so you don't, you know, crash in the wall.
All right. So I see that those were the questions. I see some great comments coming in. Your English was perfect. The presentation was very interesting. Some nice examples that you gave. So it was well received here. Thank you very much for participating, Andrei.
Thank you so much. I know my English is bad, and one more time, it's my first time presenting this in English. So thank you very much for your patience with my broken language, and I promise it will be better when I speak German at all.
Okay, perfect. Have a nice evening, and we will see each other in the future. Bye-bye, Andrei.
Thank you very much. Bye-bye. Take care.
Oké, dus ik pak nog eventjes de presentatie over. Nu zien jullie nog eventjes mijn beeldscherm. Dus zoals gezegd, ook door Andrei gezegd, wanneer u zijn optiestrategieën wenst toe te passen, is de beste methode hiervoor via de multi-marktrekening. U ziet dat bij WH Selfinvest u zeer goede trainingen krijgt, u zeer goede ondersteuning krijgt. altijd in het Nederlands of eerder in het Engels via de professionele traders. Dus via deze link kan u zeer makkelijk een live multimarktrekening openen. Moesten jullie nog vragen hebben? Zoals reeds gezegd, we zijn een zeer bereikbare broker. Wij zijn open van 8 uur tot 22 uur en dit steeds in het Nederlands. En zoals Arash het al zei, de service begint nu, bij het eerste contact dat wij met elkaar gehad hebben. Hoe kunnen wij u verder helpen of hoe kan u vragen stellen naar info@whselfinvest.com. Wij hebben ook een telefoonnummer in zowel Nederland als in België en wij hebben een chatdienst die steeds beschikbaar is. Als jullie graag samen met mij of met Arash een live gesprek willen inboeken, gebruik dan onze Calendly-link. Hier ziet u de mijne. Voor mij is het Amerikaanse aandelen en opties. Dus het stukje van free stocks is het best om met mij te bespreken. Als je graag over deze multi-marktrekening iets hebt, boek dan zeker een afspraak in met Arash. Daarnaast rest er mij nog te zeggen dat al de webinaren, seminaren van het verleden op ons YouTube-kanaal staan, WH Selfinvest Nederland. U kan u hier zeer makkelijk abonneren. Ook de video's van vandaag zullen eind van deze week op ons YouTube-kanaal worden gezet. Dus daar kan altijd nog worden nagelezen, nagehoord van stukken die jullie eventueel gemist hebben. Zoals jullie al zeker weten, werd dit webinar georganiseerd door de online broker WH Selfinvest. Ik wens u ook namens hun een zeer fijne avond. Ik hoop dat jullie er zeer veel van hebben opgestoken. Rest er mij nog jullie een fijne avond te wensen en hopelijk horen wij elkaar in de toekomst. Dag.